Welcome to DrJLT Economics. I'm Dr. Julian Tong. In today's episode, I want to talk about housing bubbles. I want to divide this episode into three segments. In the beginning, I want to talk about why a lot of governments love to inflate housing bubbles. They want to encourage it. Or maybe to put more correctly, why a lot of governments are tempted to implement policies that eventually lead to housing bubbles. And secondly, I want to talk about why housing bubbles, in my judgment, are more dangerous than other types of bubbles, except, of course, the currency bubble, which is basically everything bubble. And thirdly, at the end, I want to talk about some of the suggestions that I think policymakers should take heart in dealing with housing bubbles. So first things first, why do governments love policies that inflate housing bubbles? Well, I think a lot of this has to do with popularity. And housing bubble does as real estate prices go up, there are a few things that come as a result. The first of which is talked a lot, I think, by a lot of economists, which is the wealth effect. Now, basically the idea is that homeowners, even though they perhaps are not earning more money, just simply because their net wealth appear to have gone up as their the prices of their houses go up, they feel more confident, and this would lead to more spending, and also at the same time, as their the price of their property goes up, they are more able to borrow against these properties. So this would lead to more consumption, and this would lead to more a bigger market, and this is basically what is called the wealth effect. Now, I personally do not think spending is the more important aspect of an economy. I think it is really production-driven economy that is more important. The production is more important lever than consumption. Of course, there needs to be a balance, but I would argue, in fact, that when you have very high housing prices, you do not necessarily observe a valid wealth effect if the majority of your population or a significant proportion of your population do not own properties. And it's actually something that is both negative to production and negative to consumption. But I will talk about that in the next section. So this is let's stick to why governments love it. So there's this wealth effect. And then, of course, there is a feature of housing bubble which is quite different than, for example, stock market bubbles, which is that people who purchase homes usually do so to live in it. Now, of course, there are people who, in the later stages of a housing bubble, in an increasing proportion of house purchases are used to speculate, and they are left empty. But at least in the initial stages of a housing bubble, people need to make purchases and to live in it. And this demand makes it easy to sustain the bubble. And of course, then there is a very important aspect, which is that as your housing prices continue to go up, your economic numbers will appear great. And of course, politicians, government officials alike, basically, or what I mean is whether they are elected or not elected, they love these great economic numbers. The GDP will go up, the tax base would increase. This, of course, as real estate prices go up, they can also levy higher property taxes if it is implemented. And of course, in the case of China, which has seen, in my judgment, one of the most dangerous housing bubbles, one of the most, perhaps not the most, but still very, very dangerous housing bubble. And that is motivated, but also by local governments' desire to sell lands, because in China, the local government has the control of the land, and they are able to sell this land to property developers, which in my judgment is really perverse, because I think this is really perverse. I strongly disagree with this, because in China's constitution, it is not the local government who owns the land, right? It is the people who owns the land. And if the people needs to have housing built on the land to live in, it is not the job of the government to speculate on it. And a lot of governments, nevertheless, local governments, speculated on this. And so all these incentives from the wealthy facts, from the appeal that this bubble can be easily sustained, and from all the economic numbers that just make government officials and politicians look great, they love to sustain these. They love housing bubbles, and so that is the first part of today's episode, right? Why is it that there are a lot of housing bubbles and they just keep popping up everywhere? But housing bubbles, I think, is also in a unique position in terms of the danger that it poses, right? It is, of course, unique in that it is common. It is very easy to inflate, and a lot of people enjoy the inflation process. But at the same time, it is exceptionally dangerous. It is, in my judgment, only less dangerous than what the Federal Reserve is doing now. The Federal Reserve is doing now is really just end-stage capitalism. It's suicide, and of course, it keeps temporarily the housing bubble inflated, but of course it also keeps all the bubbles, Bitcoin bubble, NFT bubble, the stock market bubble, the bond bubble, everything is in a bubble. And the only thing that will crash, of course, I think, is the currency, and that is even more dangerous. But put that aside. Another thing, one thing that is the most dangerous amongst all normal bubbles is housing bubble. There are a couple of reasons why this is so. And the number one reason is that to deflate a housing bubble, you destroy real wealth, right? On the way up, it looks all great. You feel great. There's this so-called wealth effect. But on the way down, if it does come to it, and history has shown us that every bubble must burst, there has never been a bubble that does not burst throughout history. Of course, it may take longer, but if it takes longer to burst, it only means that the process will be more dramatic, and the suffering will be worse. A case in point is Japan. Japan had the biggest bubble at least until when the biggest housing bubble, until it popped. Before it popped, that was the biggest in human history. I think the imperial palace of the Japanese emperor, I'm not entirely certain, just a couple of square kilometers, I think, or square mile, something like that. The price of that property is enough to cover to purchase the entire California state, the state of California in the United States. And California, I think, has an area comparable maybe to, I think, countries like Germany or France, right? So that is the degree of insanity. There was, right? Of course, then in the deflation from this bubble caused Japan to lose not 1 decade, not 2 decades, 3 decades and counting of vibrant economy. In fact, Japan has entered population, a decrease in population, right? A decline in population, and perhaps permanent economic deflation after the burst of the bubble. So this is why this is very, very important, because all the people made real purchases. They put their real money on the top. It is people who put real money on the top to make purchases. It's not like on the way up. Of course, it feels great. You bought a house for 100,000. 10 years later, it's worth 5 million. Of course, you feel great. But imagine people who made purchase of house at 5 million and 5 years later or 2 years later, it's now worth 100,000, right? That causes systemic problems because on the one hand, you have the individual who probably have defaulted already and perhaps now is either renting or maybe even worse off, even living on the street. Well, the lenders who lent the money for the mortgages, suppose that the person was, of course, purchasing on credit. The lenders have lost real money because the lenders lost real money. The housing developers, they built things on credit. So basically, it's a sudden disappearance of credit because on houses in the beginning of a housing bubble, a lot of people perhaps purchases with larger proportions of down payments, but at the end it's all credit and everyone is on credit. And when the credit suddenly disappears, there's a sudden destruction of wealth. That's one point. And the second reason why it is exceptionally dangerous is that it has a large contagion, right? Let's say, supposedly, in the beginning of a housing bubble, before there's a housing bubble, you have a property ownership rate, maybe let's say it's 20%, right? And then at the end of the housing bubble, you have maybe half of the population owning houses. Now, when the bubble deflates, not only are the people who made purchases during the housing bubble experience problems, but also people who made purchases earlier. There's a huge contagion, and because people are told to really price their primary residences as some sort of part of their wealth, this if a housing bubble is led to deflate, it becomes very unpopular. I think this is something that is very, very dangerous in my mind, because this leads to very high resistance to any jobs in housing prices. And a government that takes the right steps to control the rise of the inflation of housing bubbles can be very unpopular. And because homeowners will say, hey, why is it that my housing prices, the prices of my house don't go up? I want to see it go double every year. But people don't understand. Of course, for the few very wealthy people who are able to speculate in housing markets, they will make real money. But for most people, it doesn't really matter whether your house is worth 100,000 or 5 million. What matters is the utility of your house. And when the house, the price of the same house goes from 100,000 to 5 million, all that happens. That's just why I don't buy this wealthy factor bullshit, right? When the exact same house goes from 1 million to 100,000 to 5 million, what happens is not that everyone is 50 times richer. What happens is that people who have already purchased, who already own the house, don't see any difference. But people who have not purchased houses now must use money that they can use to make other purchases in order to make the same purchase, to live in the same house. So this is inflation. And at the same time, of course, it's not just the people, but also from the entire economy, we will see that I think also as more credit is allocated to the housing market, more capital is allocated to the housing market, what happens is that production is diminished. Real production except housing, right? You could see a boom in GDP growth. But if a lot of that is basically heavy capital investment in real estate, what happens is that production except real estate can actually come down. And so people don't really benefit from it. There is a number effect, GDP effect. There is a number effect that makes the number look great, economic numbers look great. But it is basically inflation, at least in housing. Perhaps not a complete inflation in every aspect of lives, but it is an inflation in the housing market. And that is not necessarily something that is great for the economy. Of course, I think as an economy grows, as the normal demand becomes higher and living standards becomes higher, the labor cost and all the costs go up, how real estate prices should rise correspondingly. But if, for example, a country's GDP without X real estate grows by 2% or 3%, it is perverse if the real estate prices grows more than 2-3%. If your GDP goes up, or X real estate goes up 1%, you better make sure that the real estate prices don't go up more than 1%, because then you know that that means more capital is drawn to real estate, which, to be honest, while it offers some utility, is not everything. If all an economy has is its housing bubble, then the economy is dead. And that is the very, very end of a housing bubble, because then it would have nothing left to sustain the bubble. Right, so this is contagion effect. And so the third and final reason why I think it is more dangerous than other sorts of bubbles, housing bubble, is that there is a great urge to continue to inflate the bubble by the government officials, by the politicians, and in fact, it's also quite popular by a lot of homeowners. But the way to go about doing it is what I believe is going to be written in textbooks in the decades to come. Why the United States collapses, the US dollar collapses, is going to be why is this. I'm not going to go into this much further, but the way that you go about reflating an end stage housing bubble is to destroy our economy. And the only way at the end to keep it inflated is to print money. And this will, of course, lead to the final destruction of your currency. And then, of course, there is no economy to be spoken of. So I think now is time for us to come to the last segment, which is how we can do. What can a government do, or what could policymakers do to prevent the inflation of housing bubbles, to not have this problem in the first place, or how to deal with it at the early stages, in the early stages of a housing bubble. Now, I think there should be a couple of principles that we look at. The first is that we don't ever allow a housing bubble to really grow big, because we should be very careful about it, because it is very, very dangerous, just as I have already stated. It is not something that you can easily control. If we really want to inflate some bubbles, of course, I don't think any patriotic politicians or government officials should be encouraging any sort of bubbles. But, of course, there are opportunists. So if we are ever going to tolerate some sort of bubbles, it should be in more secluded areas of an economy. Some areas where it does not have this contagion effect. And I think maybe it is the stock market. I'm not saying that it certainly is the stock market, but it has to be somewhere where the danger of a deflation is not so strong that it can take down the entire country's economy. That is something, right? And how do we go about doing that? I think we can implement policies such as rent control, right? Don't allow predatory rents. We can also have to implement realistic interest rates, not very exceptionally low interest rates that make it obvious that it is a good thing to speculate on real estate, to borrow a lot of money. So that's one way, one aspect of it. Another aspect of it is that when there is a housing bubble, there should be the government officials should be very keen on this to detect early stages of housing bubble. And I think when you have consecutive quarters or perhaps years, several years in a row, when the growth of the housing market, the real estate sector, surpasses the growth of, let's say, the country's GDP X real estate, then you know that the real estate is really becoming too hot, and there should be policies implemented, such as stricter credit controls, higher mortgage rates, and more affordable government rental programs. All these things to control real estate bubbles, because we do not want to have bubbles. When bubbles go up, they must come down. It is okay when it goes up if it's possibly good, but it is when it comes down that an economy is really tested. Of course, there are some bad, let's not use the stupid word bad. There are some, let's say, greedy, short-sighted, unpatriotic politicians who want to see good economic numbers. And that is why there needs to be transparency in making sure that this sort of people don't stay in office. Because when this sort of people stay in office, there will be bigger bubbles. And what happens is the destruction of a country's economy. You can look in the economic history of the world. Of course, in in this century in particular, there are a lot of housing bubbles. And in the last century, I don't mean the 21st century, but in the last 100 years. This has been enabled by the financialization of the world's economy, namely, basically, a lot of purchases based on borrowing, not on savings. I think this should be, even though there is this difference, if we look at the history of the world, we will be able to see that a lot of bubbles have come and gone. And every time there is a big bubble, some people will think that this time is different. They will say that we have everything under control. This party is never going to end. But every bubble eventually bursts, and when it comes down to it, it is really how strong and how balanced a nation's economy is that matters, not how high the housing market, housing prices is. All right, so this is my take on housing bubbles. In brief, in the first maybe 5-6 minutes, I talked about why there's a lot of affinity. There's a lot of affinity in the public and the government officials alike to housing bubbles. And then I talked primarily in this episode about why I think housing bubbles is exceptionally dangerous. And finally, I talked about some of my suggestions as to how to deal with housing bubbles. Thanks for listening. I wish you a great day.